Hey, this is June from Turning Point Life Investment. We're going to look at Apple, everyone's favorite fruit. So let's take a look at the chart. As you know, if you've been following my videos, one of my emphasis is to always keep things simple. Use real simple technical analysis. Look at the price action more so than the indicators. That's why you don't see any indicators on the screen right now, because I'm just going to focus on analyzing the price first. So real simple. Let's start from the left side. We see we have a series of higher highs and higher lows. That by definition is an uptrend, but look at what's going on now. We have a series of lower lows and lower highs, and that is what we call a downtrend. Real simple definition. I'm looking at a 3-year weekly view. So each candlestick is 1 week. Since I'm looking on a 3-year weekly view, this is a longer term time frame. I always start with a longer term time frame, kind of like a top down approach, where let's look at the long term trend. What is the overall stock doing, minus all the little squiggles within each day. So I just want to take out the noise and look at this stock from a longer term point of view. And of course, it's telling me that this stock is still in a downtrend, even though we had a pretty decent rally these last couple of months. As long as Apple continues to make lower lows and lower highs, we will still be in a downtrend. Okay, you can't deny that. Not until we get a higher low, meaning that this, if we do get a pullback, it will be higher than this previous low, and we bust out above this previous high. Not until we see that can we say that Apple is now in a new established uptrend. Okay, so TA, in my opinion, TA isn't really used to predict, but merely to tell us what to do if a certain situation happens. Okay, taking away the arrows, let me draw some lines. You can see how we are fitting within a very nicely tight fitting channel, and prices, surprisingly or not, right, we managed to stop right at this upper channel, very similar to what happened here. I would say Apple is at a pretty critical resistance level right now. Why is that? Well, if we do get a breakout above this channel, then we know that it's looking a lot more bullish, okay, than it is currently looking now. However, if let's say I'm bearish on Apple and I want to short this thing, this would not be a bad idea to be shorting. At least this is a relatively safe point to be shorting. Why is that? Let's take a look. If you manage to short Apple right now, your risk is roughly around that much. Okay, because if you know that Apple breaks out above higher, you know that this thing is going to start looking more bullish. So as far as risk management point of view, it makes sense from a risk management to be shorting this thing, because you know you have a defined stop. It's different if you were, for example, shorting this thing right here, because you know in the long run your stop isn't until it's out of this channel. Now, of course, I'm talking about a longer term time frame. I'm not talking about your intraday or daily shorting, but I'm just talking about a longer trend outlook here. So that's why I say we're at a pretty critical resistance level. If this channel holds, then we know that the next time it comes and tags this channel again, we're probably going to meet some selling pressure. Now, how far is this going to drop? That's anyone's guess. Can it drop back down to this channel? Sure it can. Will it? I don't know. Okay, but what we do know is that right now is at a critical point, and most likely if this channel holds, we will see some kind of sell-off, depending how far it goes. So the main thing you want to identify is you always want to identify that turning point in a stock. Just like here, this was a critical turning point between an uptrend and a downtrend. So same thing here, you have a nice decent rally for several months. Is this the turning point for this stock where it will head lower, possibly all the way down to this bottom of the channel? So, and you know, that's something that you want to be able to spot pretty easily. Okay, so with all that said, let's throw on some indicators and let's see what's going on with Apple. As far as moving averages, not a whole lot. Notice how it's going flat. It's gonna be somewhere around here. 120 would be where the convergence is occurring. So I would say 120, maybe a little bit higher. If the pullback does continue, it's probably where you're gonna find some kind of support. And surprisingly, not stochastic is overbought. Pretty obvious, given that it's a pretty strong run up. You're going to see some overbought stochastic, and as far as MACD, we are seeing a little bit of divergence. So overall, it is pointing towards a pullback Another major thing you want to notice is divergence with the volume as well. And that's pretty common with the market today, where even though it's going higher, volume is decreasing. So we have several divergence going on and it's overbought. And it's hitting at the upper channel. So I would expect Apple to pull back a little more. However, if we do get a break above this channel, then that will be your upside surprise. So always prepare for both situations. However, currently I would lean more towards the bearish side for Apple, at least from a longer term, like a 3-year weekly point of view.